Okay, now we move to still in the same scenario, that is scenario 2, but for absorption costing. In scenario 2 just now, we have production units exceed the sales unit and the unit sold is still 18,000 units. So when you produce 20,000 and you only sell 18,000, so 20 minus 18 gives you 2. So that 2,000 is your closing stock. So once you, this one, you have prepared just now your stock movement. So your closing stock is 2,000 units. Your opening stock is still 0. Okay. So you prepare your absorption costing. So income statement for the year ended 31st December 2019. So you start up with your sales. Here, your sales is 18,000 units times with your 25 ringgit per unit gives you 450,000 ringgit. Next, you less your cost of goods sold. But your cost of goods sold, if you are using absorption costing, you are taking the full cost. Full cost here means your variable cost and the fixed cost for the production overhead. Okay, the quantity as what you have determined just now, opening stock, production and closing stock. Opening stock is 0, production is 20,000 and your closing stock is 2,000 units. Times with your cost per unit is 15.25 under absorption costing. Your cost per unit is 15 ringgit and 25 cent. So you add that, gives you a cost of goods sold of 274,500 ringgit. Sales less your cost of goods sold gives you a gross profit of 175,500. Next, you less all your non-production costs. Here, you have your selling overhead, including your variable portion, okay, and your admin overhead. So, as I mentioned earlier, if you are using absorption costing, it splits the cost into functions, based on functions, whereas if you are using marginal costing tends to split your cost according to behavior, that is fixed, fixed cost and variable cost. If you are using the absorption costing tends to split your cost according to the function. So that's why you have the production cost as part of your cost of goods sold and all your non-production costs here. Then it will give you an adjusted net profit of 82,900. As I have explained earlier, for absorption costing, you will have the over or under absorb of your overhead or your fixed production overhead, to be more specific. So as we have worked out just now, our under absorb of overhead is 2,000. So you have to less your under absorption of overhead 2,000 gives you an adjusted net profit of 80,900.